Venture Capital Trends, Investors' Do's and Don'ts.
Hello everyone, so today we'll be talking about venture capital do's and don'ts. I'll be moderating. I'm joined by Michael, by Vinícius and by Yuriy. I'll let the guests introduce themselves and then we can get started with the panel.
All right. Hey guys, I'm Mike. I'm co-founder of a venture firm based in Zurich called WTG. We invest and support our portfolio companies directly with go-to-market specifically. Our focus is exclusively Web3, pretty much every vertical except gaming.
Hi, I'm Vinícius. I'm investment partner of Ikigai. We invest in a lot of things, mainly games, but also emerging tech such as AI, blockchain, and whatever we call things that we don't really understand very well. So deep tech and all that.
Nice. Hi everyone, my name is Yuriy Romanyukha, originally from Ukraine, and over the last decade I'm endeavored this venture capital topic. I'm a venture partner of the ICLUB Global. That's the angel investors community, and right now we released our product specifically to co-invest in venture capital companies. So we have already co-invested in 50 million amount through the iClub in 96 companies and made 9 exits for now.
So the first question for the panel is, the market has been in turmoil recently. It's been not as positive as a few months ago. So what do you guys actually think will be happening in the market for the next 30 days? Are you expecting it to sort of stay stable? Are you expecting to see a pump? And what factors do you think will cause the market to move?
Who wants to go first? So I shouldn't have sat right beside you. I am not generally thinking in 30-day time horizons. I tried to think a lot about how I could answer this question, though. There's been a lot of kind of manifestos published in the last few weeks or days by big VCs, and I think that's always a bad sign. Whenever you see like leaders in this space advocating for belief in this space, you know things might be pretty dire. So that's my kind of like immediate outlook. But yeah, generally we're focused a little more long-term than 30 days. We're not overly concerned with price fluctuations of Bitcoin.
Yeah, I'd say the same. Since we are a VC fund, we don't really think of the market as it is right now. And without being into conspiracy or whatsoever, which I'm not, but I was reading a report recently from Carta that funds the vintage 2022, which is our fund as well, they're performing way better than funds that were vintage from 2021, 2020, 2019, and so on and so forth. So you have to take all those, let's say, market downturns with a pinch of salt, I'd say.
Yeah, I think that's, this year is quite interesting, of course. We see a lot of changes in different kind of aspects that reflect to exactly our economies and real lives in anyhow. Because we've seen that right now the Fed completely already aligned that they will lower the rates, and I think that will be speed up the process for the private market investors, especially for the venture capital funds. In our case, we started to invest in 2019, so we do have a lot of investment from this kind of period of time. And of course, even with the dramatic situation that we have on the market, there is only like maybe your perspective of understanding the topic and your approach to fix that. So we have exit last month, and it brings us like great performance result. But in my opinion, the logic should be the following: the stress itself and the fear itself, it's a disease. Basically, if you want to do something, you just need to move yourself, doing something properly. Go ahead, find the proper companies. Even in this conference, try to find out the like brightest people in this room to find out how exactly it could be actually change the whole industry. So in my opinion, that's the reality that we face right now, and the action is the only remedy.
Some interesting insights there. And Mike, you actually mentioned that you like to look at things on a longer time frame. In crypto, one of the most common things we see is that narratives really do jump almost within months. We saw like AI hype, we saw RWA hype, we've seen meme coins go through cycles. How do you balance having a long-term portfolio with actually capturing the hype of a cycle and ensuring that you maximize returns?
Yeah, it's a great question. I'm sure it's something everyone thinks about. Maybe to the audience, how many of you guys use narratives as a kind of guiding light when you buy crypto tokens? Anyone out there using narratives? Yeah. So I have a few like mental models on how I think about narratives. So first, maybe to break down your question, I think about kind of the source of the narrative, and then the kind of strength of the narrative, and then how it intersects with our investment thesis, so to speak. So firstly, I would say that narratives can be insidious. They're a really great way to rally support if they're collectively generated, but if they're coming top down from a specific VC, for example, it might be more about supporting their bag than actually advocating for the space. So I think looking for where this signal comes from, it's almost impossible, but I want to be a little bit cautious about who and where we accept narratives coming from. That said, I think a good narrative usually stems from one of four things, but a really strong narrative has all four aspects, and these are invention, evolution, fascination, and participation. So meaning that for a narrative to be really strong, there's probably some aspect of invention, new technology that's arisen, evolution, a response within the space from users or even entrepreneurs. Fascination, it's like captured the collective imagination in some way, and or participation, people are actually using it or rallying behind it. So if we look at a lot of popular narratives, you might see how they miss the boat. And I think if we don't kind of use that mental model, we can imbue something with narrative status when it's really just a word. Often something's given a word in crypto and it becomes a narrative, and that's not necessarily legitimate. So I don't know, what's a good example? Actually maybe you can comment on this. Gaming as a narrative, I think it's too broad. What's the actual thing that's happening that we're rallying behind? You know what I mean? So kind of identifying a vertical as a narrative can be problematic. An ecosystem as a narrative can be really problematic. So those four things are kind of my mental model. Now, our investment thesis at WTG is a little bit different because we're focused on go-to-market support. We tend to classify startups not by vertical, but rather by the way they relate to their user. So startups tend to either be solving urgent needs, they tend to be challenging the status quo, or they tend to be addressing an emerging possible solution. We like to focus in the middle, someone who's kind of challenging the status quo, bringing some new innovation to the market, not necessarily competing in a crowded place, but not betting on an uncertain future. So with this kind of horizontal, we really look for opportunities where startups that kind of meet that criteria intersect with a really interesting and rich narrative. And that's the long-winded answer to your question. We want to hit that kind of caliber of startup intersecting with a rich and robust narrative that people are actually interested in.
I think there are narratives and narratives. You can have, for instance, we've been hearing about AI for quite some time. I think ever since I started investing, that's pretty common. However, you can see that lately there was a huge development on it. And you can see that this is not going to be just a short time narrative. It's going to be something that is going to drive society in general for the coming future. In parallel, you can think of the narrative that happened during COVID, which was new ways of working. How can you bring that work from home at the same time clashing with a regular office space? And that was a very short time frame narrative. So you have patterns that are long-lasting, AI, cloud computing, even the internet itself. And then you have narratives that happen just because of that short period of time, and people get very excited about it, and it phased out. The way I see it more is like thinking of a broader, long-term narrative, is to have a laser focus on what you do as an investor. We could have been investing in several different areas. There was no need for us to just invest in iGaming. We could have been investing in health tech and so on and so forth. We actually have conference in health tech. But our bread and butter is iGaming. That's the industry that we know. That's the industry that we are coming from. So when this narrative clashes with our own industry, we know where this is going to. We know what are the potentials of, for instance, AI in iGaming. It's not like we are just exploring something and here AI, okay, let's think about what AI would impact in ad tech. It makes no sense for us. So we are very laser focused into, okay, our main focus is iGaming, and whatever happens surrounding that, that's where we kind of tend to look into the narrative. How AI is going to impact iGaming, how blockchain impacted iGaming, and so on and so forth.
Yeah, I think that's, I agree with both speakers, that especially with Vinícius and you, Michael, about what you have already mentioned. Just to add briefly that with the face of reality that we have right now, we already changed the mindset as investors. We already figure out that we're not just looking for the traction in anyhow format that will bring us with investment. We're just looking for the proper condition of co-investment strategy and telecom. And exactly like also what Vinícius mentioned, like with this trend of AI, we definitely will see the company that will reach the status of unicorn, but will be only founders on board, with a single person on board. Hopefully that will be our next decade reality. And about the future topic that already upcoming, not just AI, but robotics. I think that robotics is quite important topic that's already in place with the robot taxi, with the robots everywhere. Like we have invested in a company called Airspace. They right now equipped in every Equinox fitness center in the US, and they exactly in the way that robotize of this human function inside the already existing format that we already align. So that's a future trend. And a part of that, I think that biotech, that's a key pillar that we've seen already, that's already transformed exactly how we're thinking about the reality of medicine and how exactly we'll see these changes with a lot of examples starting from the Ozempic, etc. So in my opinion, that's a pillar that definitely will move forward with investors' attention, and that will grab a lot of investment fees, of course, you know, and term sheets for sure.
It's interesting to hear the different approaches with how you balance your sort of target narratives and your portfolios. Moving on, question is, with regards to macroeconomic factors impacting the market and where the world's heading, there's obviously a lot of political sort of tension around the world, whether it be in the US, in the Middle East, or in Eastern Europe. How do you see that impacting markets? Do you think the sort of tech industries will be impacted, or do you think there's actually more potential and upside with everything going on? I don't know.
I think we tend to be kind of skewed to the moment that we are, if I may say that. But if you look past, I mean, we've been through many hefty, difficult situations throughout the world, and that didn't change exactly. If you have an actual scope, if you have an actual definition of what you want to do, where you want to achieve, and so it won't be external factors per se that's going to change that. I mean, like, for instance, I started my career working in financial markets in the 2009 crisis. If I were to let this narrative of the world is crashing down, oh my God, we're all going to be back in 1929, affect me, I wouldn't be doing this. but I had a laser focus of, okay, this is what I want to do, this is what I like to do. So whatever plays in the external scenario, yeah, it might make my life hard, but it's not like the world's going to end because of that. So yeah, that's at least how I face those kind of things.
And it's not just geopolitical tension, and there's also problems with, for example, freedom of speech, Pavel being arrested in France. Do you think this will impact investments in any ways? Do you think this will have, and this is to the whole sort of panel, any impacts into how VCs will look at investments into regional investment, or do you think, again, it's not really important where you are based in terms of being a startup and you're just open to investing as long as it's the right idea?
Yeah, I can start maybe to cover a bit. So, in my opinion, that from the if we're talking about the industry like a blockchain, of course, we've seen a lot of regulators that's apparently going further with their changes with legislation, etc. In my opinion, it's for the better, but for sure, in a way that it should be like a sort of clear condition for the market perspective. But what it exactly show up to the founders and entrepreneurs that we have the time and the moment to start something bright and great, because we've seen this exactly the same condition with every industry. So once legislation coming up to appears with different kind of business model, it starts to become very complex to start something new, especially with the same format. It's basically, in my opinion, better to figure out completely new approaches for these kind of industries. And I don't feel that the investors will just lose their appetite to invest in specific industry because they already trust it with the forecast, they already understand their market value, exactly all this trend, how this approach in the direction and way. The only thing that matter is how you are performing the attraction result and how exactly you leverage these risk factors with the legislation perspective. And the next year will be dramatic for European Union because everyone will understand how exactly they need to treat their own crypto. We know that it's already in place. The topic of CBDC already also on the radar, and I think it's also changed the whole reality of our mindset of consumers, etc. But what I want to emphasize that's there is no other point of your life when you can just easily start a company like we have right now. We basically have all the resources. We have a lot of dry powders for the venture capital perspective, and the funds. Based on my statistical information, they are a bit lower in terms of what exactly they already invest, maybe 20% less than on average they do from the investor's perspective. So that's all give us a chance to create something properly new and change the whole industry and impact the status quo for their competition.
Okay, and I guess I'll ask a final question. What are some mistakes that most investors make that you guys think aren't spoken out about enough?
Can you repeat? I'm sorry, but mistakes?
What are some mistakes that investors make that are not spoken about enough?
I can start very fast and very quick because I have a lot of seen this kind of bigger. So first mistake, you put all your money to the one company or one position. That's the crazy scenario. Number second, you not deep dive with the understanding of the topic and you don't know who you are co-investing with. That's also second topic that you just need to figure out exactly why this investment rationale get to the point of this kind of exercise. And number three, of course, you need to understand more properly the individual personality of the founders, product, etc. So it's just your homework to understand whether or not it's a value for you. It doesn't matter it's a private or public market investment. It is a reality. So in my opinion, that's the three cases when you just can lose everything.
To me, the main mistake that investors made, and I personally hate this, is thinking that they are actually adding a lot. I'm sorry, most investors are only adding money and trying to pitch advice that no founder really wants. And I've been a founder, I've been through this situation. Look, if you are not really well versed into what you are doing, you're, as I said, laser focus. Okay, we understand iGaming, we've been doing this. This is where we can give advice. I would not pretend that I can give advice to someone that is opening a company, starting a company in health tech or ad tech or so on. And I see a lot of investors thinking that just because, okay, I'm writing a check, I have a saying on that. Look, you can maybe coach in a sense, more in a personal way, like, oh, you have to persevere, push it through, but don't come with really technical advice, because I'm sure, 100% sure that most of the founders already know and I've already thought about every piece of advice that you can give to them.
Sorry, so yeah, I would agree with that, and I think that's exactly why we don't touch gaming, because it's just not authentic. And when I try to talk to a gaming startup or another gaming VC, they're like, dude, you're not in this space, you don't belong here. So definitely trying to veer out of your lane can be a mistake. Otherwise, I don't know if it's so much of a mistake as maybe more of just what I wish more VCs would do, which is just kind of invest with conviction, like really put your money where your beliefs are. A lot of guys come up on stages like this one and talk about what they believe within the space, and then just simply don't deploy or don't actually back projects. So yeah, but I'd love, in the minute we have left, to ask you what you think VCs are missing. You do a ton of analysis, you see a lot of projects. What do you think people are missing right now?
I think the main, so you mean like what VCs are missing?
Yeah, what are we missing?
Yeah, so I think the main mistake VCs are making is actually not meeting founders, and this is very prevalent in the blockchain space. Everything is done online, and I think when you're investing in a company, as much as you're investing in what you believe the business to be, you're also investing in the founders. And I think not enough VCs actually will try and meet the founders before deploying a ticket, at least in the blockchain space. I don't know about how it is in other industries, but that's definitely prevalent in the blockchain space.
I think like the only two things, unless you were really experienced in the market, and I'm 100% honest, I've been doing iGaming for the past 2 years and a half. Before that, I only did financial market, fintech. That's where I come from. The only two things that you can actually add value is write a check and maybe make introductions, commercial introductions, and so on and so forth. Trying to run a company just because you wrote a check, it's so off to me that, yeah, I can have a phantom why people do it.
Yeah, and I also want to add that venture capital investment, it's not the same like a playing on Trump. Like, because like, if we're talking about like, something that we are just putting our attention for, like it is all about the skill set of founders of the venture capital fund. They have investment thesis, they are strongly believe in the market, and they just going further with their strategy. But the funny story also, like just to mention that there is a lot of investors that start out the venture capital funds in different kind of years, but no one actually follows completely all these investment fees. But maybe like the practice case for everyone that's hearing this speech from the startup perspective, like it's to approach investors in a way that they should share their opinion, because you never know, like even if it's just like focus of your product is not aligned with their strategy, it could be a case that they will change the investment fee specifically for you because your vision and product is exactly something that they are quite curious about and interested to be part of.
Okay, yeah, thank you to the panelists. I think we got some very good insights today, mainly to invest with conviction, to have a longer time frame in mind than 30 days and actually look at the future, and to actually ensure that you are sticking to what you believe in when you invest.
Thank you very much.
Thank you.
Thanks, everyone.